Hi, welcome back to my series on financial responsibility. And today, this episode is going to be about what banks are and how they work. I feel like a lot of young people don't really understand what exactly banks do. And so this video is going to kind of explain what a bank's primary function is and how they go about their business. Okay. To start, a bank is a business. A bank is trying to make money. That is their goal. It's not like they're a free service or anything like that. They're companies that are trying to make money. Here's how they do that. When a bank opens, they start with investors. So just like any other company, an investor will invest money in this bank and say, "Look, we really believe in what you're trying to do. We're going to give you some money, and then you can create this bank." So when a bank opens, it has this kind of pool of money that it can draw from. And then what that bank does, this is how it makes money, it loans that money out to people who need money for various things, like to buy a home or to buy a car or to buy furniture or whatever it is that they might be buying, right? They'll loan that money to those people, and they charge those people interest when they pay them back. So the bank is making money off of loaning funds to other people. That's their primary way of making income, is off these loans. So then how do you fit into that, right? Let's just say it's like, "Oh, I only have a savings account at the bank. I'm not part of that." Well, you are, because this is how it works. The people who have savings and checking accounts at the bank, you're adding your funds into the bank's pot of money that they have. So when you go and set up your savings account and you add your, whatever money in there, that money is now part of the bank's pot. They're saying it's your money, right? That's your $1,000 or whatever that you have in your bank account, or whatever amount you have. But they're going to take that money and they're going to say, "Hey, if somebody needs this, if someone needs a loan, we're going to loan them your money that you have in the account." Now you can come back and you can still take your money out whenever you want, right? We'll still be able to give you cash when you ask for it. But your money that you gave us, we're loaning it to someone else so they can, buy a car, and they're going to be paying us back with interest. So we know that we're going to have $1,000 on hand to pay you out whenever you need it. But we're going to be using your funds as part of our pool of money to loan. And so that's primarily what banks do. They take in money from either investors or from interest on their loans they give out, or from people setting up savings and checkings account, and then they loan that money out to people who are in need of more funds for whatever reason, right? To buy a house or whatever. So people should actually put their money into banks. People seem to have this view nowadays that putting money in banks isn't great. And there are some banks that I wouldn't suggest putting your money in. There are some banks that give loans to people who want to tear down forests, or people who want to build oil pipelines through the United States. And you might morally object to that. And so what I would say is, don't not invest in any banks. Don't not put your money in any bank. Just pick the bank that aligns with your interests. Or even better yet, don't pick a big bank like JP Morgan or Chase or any of those. Pick a bank that's local to you. There are tons of banks that are local banks that are run by people in your town or neighborhood, and those banks need money. They need accounts set up in them so they can continue doing business and they can continue giving out loans to people in your community. So in fact, if you do have your money saved in a bank, or you have a checking account at a bank, you're not just helping yourself out by having that account, but you're also helping out the people in your community. So being a member at a bank or a credit union or any type of financial institution that's locally owned or locally based is helpful and beneficial, and something that you should consider. It can help you save money. It can help you manage your money better, like I said earlier in some of my other videos. But it's also going to generally help your community, and that's something that some people might find beneficial, that they're able to help out their own community. Anyways, that's pretty much how banks work. Just to summarize, remember, banks make money by loaning money to other people and then charging them interest when those people repay their loans. That's their primary source of income. Thanks for watching. See you again soon.